Well, back in January, we asked a group of economic experts to look into their crystal balls and tell us where they saw some key economic indicators at the end of the year. And just to keep our experts on their toes, we also invited commerce students from Luther College in Melbourne to give us their predictions. As the new financial year kicks off, we thought we'd go back to them all and see how they're faring, starting tonight with the stock market.
We think it'll be around 42.50 by the end of this year. I mean, there's two major issues going on with the share market. One is this global problem for the share markets in the developed economies. So the European markets in particular are very weak, and so is the US. They've had quite weak growth outcomes. The second issue is this allocation of money by Australian households. They increasingly want to have less exposure to shares, and that's most probably influencing the purchasing of local shares by the big funds.
Still relatively comfortable. I think the risks are that we fall below 4,000, but these are range-bound markets, and it's a bit of a lottery where the index finishes on the 31st of December. But if I'm going to be wrong, I think it'll be the markets below 4,000, not above 4,000.
There's a lot of volatility in the Australian stock market. It's actually quite out of sync with real measures in the Australian economy, particularly the GDP numbers. I'd be prepared to take it down to 4,200, but I still think we've got a lot of swings and roundabouts and a lot of volatility to go through before the end of the year.
Well, we've trimmed that number down to around 4,700, which is still a pretty significant increase from where we are today, around 4,000. We still think as we move through the back half of this year that we'll get better growth out of China, better growth out of the US, and hoping that the European situation will settle down enough to let markets move higher.
We're pretty happy with it. I think we're second from what all the others were on. But between now and the end of the year, I think that it will still lower. I think with the growing uncertainty in Europe and Greece and places like that, I think that consumer confidence will lower and people want to take their money out of shares.
Well, as you can see there, the students of Luther College in Melbourne are well in the money against the professional experts. And tomorrow with the Reserve Bank board meeting, we'll be looking at their predictions on interest rates.